Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today in the Econ Show, we're going to break it out into 5 segments, and we're going to look at global changes in uprisings and really what comes next. And if you remember, what we were talking about was that as you come out of a pandemic, epidemic, you typically have a lull point, and then you start to see a big increase in uprisings. And that's something that we wanted to look at. And the most recent study came out looking at militarizations, peacefulness versus additional increases in uprisings. And we want to look at that because we're still very early. So some of the data looks pretty good unless you start looking forward. And that's what we want to talk about to see how those are changing. And then we're going to put that in the backdrop of what's happening to rates, what's happening to food prices, because that is going to be a big benefit, driver of, are we going to see more increases, less increases? What does inflation do within that, backdrop? And those are things that we want to look at more closely. So really marrying, uprisings with food prices and food shortages. Then we're going to go and look at the U.S. consumer, and we want to look at the changes that's been happening in wages. What division of wages? How is that impacting the consumer? Where are some of those shifts coming from? And then we're going to follow that with real estate. What's happening with new homes, home sales, home prices? And then really dig into inflation, PMI pricing. We've had Empire data, Philly data, Richmond data, market data. So we want to, market, for JP Morgan, IHS. So we really want to understand, are we starting to see a shift? Are we starting to see some cool down in inflation? Is it still getting worse? And hint, hint, it's still going up. So then we're going to turn to Europe, and we're going to look at PPI. That is the most recent stuff that's really come out, and just hint, their prices are going up too, not just us. And then we're going to look at Asia, and we're going to talk about what's happening within the Asian theater. And we're going to dig in a bit more on Xi's push of common prosperity, because that's been something that's come out a lot, and it's now being echoed by the PBOC, and we want to understand what does that mean going forward, and why are they pushing this agenda so aggressively. And I think we'll try to understand why they're doing that. So now, before we get into the backdrop of the global uprisings, we want to look at rates, because for those that are new to this, when you look at FX or foreign exchange, you look at rates, and then you look at inflation, and then you look at uprisings. They're all very correlated. They have a lot of consistency within them. And one of the things that we keep talking about, especially on the emerging market side, is that a lot of these individual countries are in a rate rising cycle. So we're still at the bottom of the barrel. You look at the developed world, we have more capacity to stay at this level, because even though inflation's obviously running hot here and in a lot of developed nations, it doesn't have the same impact as it does in emerging markets. And they're trying to get ahead of that. And we've already seen some of these policy rate increases, with Paraguay being the latest, which is the first hike in more than 5 years. Most developed economies have held rates this year, but emerging markets from Russia to Brazil are raising rates due to pricing pressures. Hungary is expected to on Tuesday. So when we look at where things are going, we continue to see these movements, and then some economists are even expecting South Korea to be next. So you're already seeing a lot of these shifts. India's already talked about, they've had another hot print of inflation running above where the RBI has been expecting. So there's some pressure within that. So you're starting to see these rate increases really starting to roll out. And it's not that it's a bad thing. It's just they're trying to get in front of this inflation push. As you raise rates, you start to cool down some of the economies, and you're just not at a growth point yet. So again, these are some of those pressure points that are going to continue to hinder how much can these countries support their citizens, how much stimulus can get pushed through, because as we know, stimulus has been the name of the game. And with emerging markets, as their basic necessities go unmet, as there's more pressure, as I wrote for Politics Today about Iran, Sudan, Lebanon, and then again a bit deeper on Iran after the new government was sworn in and the droughts have increased, there's a lot of things coming through. And then when we start looking, one of our analysts, Osama, has also written about Pakistan and a lot of things that we've seen overall. So again, these are things that we want to talk about, that we want to hear and really discuss, because these are going to be the next pressure points in those drivers as we look at what has happened around the world. So when we look at improvements, we've seen some improvements for countries were more peaceful in 2021 than 2020, and deteriorations in 73 countries were less peaceful in 2021 than in 2020. So again, there's a certain amount of arbitrariness to this, and I'll post the article or the report that this came from, because I thought it was an interesting way to try to quantify some of these uncertainties. So obviously we've seen some improvements, and then the general overall change is by about 7 basis points. So the global GPI average deteriorated by 0.07% from 2020 to 2021. So we did get a little bit of a deterioration, but it's only gotten a bit worse. And especially when you start looking at Afghanistan, which, for those that can't find it, because there's no names on this map. When you look at India, you have to go to the west and go left, and you see that it has gotten red at that point, and that's really stuck between Pakistan and Iran. So here's where you can see there's risk in this region to see this expand and to see problems continuing to grow. We've also seen a deteriorating backdrop in other African nations. And the same can be said even within Europe, even within the U.S. when you look at some of the uncertainties, and things are, again, it's in pockets, but it's just something to consider when we're looking at the overarching theme of where some of these pressure points are, because a lot of these areas could quickly go from orange or deteriorating to then just a full-blown uprising, with Iran kind of being the uncertainty. As I don't know, for those that have seen it, there was a security camera system that was hacked showing, again, not to be surprised, but the torture and mistreatment of political adversaries. There we go. So when we start looking at some of these different backdrops, then we want to look at what is happening in the other stands. When we look at Tajikistan, when you look at what could happen with the Taliban, what could happen with China coming through, and then you look at the other regions to the north of Afghanistan, when you can start to see some of this uncertainty. Again, there's a lot of activity. Russia is going to try to keep some of that steady, but you can see they're already seeing their own issues. And as we come to the other side of COVID, how much pressure is that going to add to the underlying? So then when you look at the year-on-year change, the overall score got a bit worse when you look at just where things deteriorated overall. With safety and security, ongoing conflicts have started to abate. And it's not to say that Syria has calmed down or Libya is in a better spot. It's not fixed. There's still foreign troops in there. They still haven't agreed to how the government's going to look, but there's a certain amount of stability that has come through, which has pulled back some of that ongoing conflict. But then when you look at the militarization, that's where we get this concern, because the militarization continues to expand. Now, it doesn't mean that it's being impacted or being used, but it's being in preparation for using force against protests, against uprisings. On the other side, we've had Myanmar. Myanmar's gotten a bit worse, has continued to deteriorate. And when you look at where Myanmar is, again, that's orange. Does that go to red? And when you look at a worsening situation as things continue to deteriorate, and is that going to expand into other regions, with Thailand, Malaysia becoming some of this unknown as some of these individuals go from Myanmar over? So then when we go a step further, when we look at percent change in score, when you look at weapons imports, again, looking at that backdrop, violent demonstrations increasing, military expenditures continue to go up. Refugees, as we start talking about, again, Afghanistan, you start looking at Myanmar, you see these movements. And then Africa, something very similar. When you look at other areas that you see a lot of this displacement. Then then political instability. That's the one that, as I talked about with Lebanon, Sudan, and some of these, and Iran, we're starting to see some of this instability continue to branch out, which is going to become that underlying backdrop. Now, the terrorism impact and the internal conflicts fought has seen a big drop. Now, when you're in the midst of lockdowns, when you're in the midst of in the throes of the uncertainty, you typically get a big decline in activity. So because, people, it's harder to do things, there's more checks, you're not going to have the same type of panic. So some of this cools off. Now, as we come to the other side of COVID, a lot of that is going to increase. Then we come back to Afghanistan, where as the Taliban came through the different provinces, they opened up the jails, letting out a lot of either ISIS members, Al-Qaeda members. They just picked for their Secretary of Defense or their defense minister someone who was locked in Guantanamo. So we're not finding a lot of friendly people in that region, again, causing some of these problems. So this is something where it's gotten better, but if we start to look forward, are we going to start to see some of that deterioration? But again, it's also going to take time. You don't just take people out of jail and then they all of a sudden start up a cell. You have to create supply lines. Where's going to be training facilities? How do you recruit individuals? So these are going to be things that are going to happen. And as food becomes the bigger problem, as droughts become a bigger problem, water scarcity in general, it'll be able to be essentially that rallying cry to pull people to a unifying cause. So then when we look at that regional backdrop, so Europe has essentially gotten a little bit better, given we can show scenes of protests on anti-lockdowns, but you can see that things have gotten a bit better. In North America, they've gotten a bit worse, obviously, from what we saw in DC, what we see in Portland, what we see in a lot of these areas that are problematic. And then when we look at Asia Pacific, something very similar. Then and that's where the Asia Pacific side is where we could start to see some of these increases in some of these uncertainties. Same with South Asia and the Middle East, North Africa. When you look at Middle East, North Africa, that has gotten a bit better, which is when you look at Libya. I mean, obviously Syria is still a problem, but it is not at the same level that it was. So that's where, again, we don't see that changing too much. Obviously, Israel continues and allies continue to strike within Syria, but then you could start to get some of this uncertainty when you start moving that into Lebanon, start moving that into some of the other areas. But a lot of that will be in pockets. And the same can be said about that Asia Pacific, and then the South Asia. When you start looking at what is some of the things that are happening on the Pacific side, but then what are some of the things happening in South Asia could start to see some of this uncertainty, some of these increases, same with Sub-Sahara. So, that's where we could actually see this worsen a bit. And then when you look at Russia, Eurasia, and you look at Kazakhstan, you look at Tajikistan, these are places that we're going to want to watch closely. And it's all because when we start looking at the UN Food and Agriculture, prices have come down a bit, but they still remain at near highs that we saw in 2010 into 2011. Remember, Arab Spring was 2011, and food was a big part of that. And prices have come down a bit. They've come back up since, as we continue to see issues in the Russian harvest, in the South America harvest, and then we continue to see things dropping down and getting worse in the U.S., which is just going to put a bid or at least protect some of these price declines, especially when you start looking at what is in storage, which is when we look at total frozen chicken in the U.S. in cold storage is at the lows versus the last few years. Then you look at total frozen beef, coming down to these lows. So you keep seeing, and a lot of this product not being available just puts a bid within prices, keeps things, more expensive, and just again creates this underlying backdrop of problems where you might get some benefits from grain pricing, but again, meat prices remain elevated. And even with this level, the animal product export shares to major foreign destinations continues to rise. So when we look at what's going to Asia, and you have 3 guesses to understand where in Asia that's going, but it's China, and a lot of that, they're taking in pork, beef, dairy, eggs. They're trying to pull in as much as possible given their own shortfalls and coming back to this common prosperity. Well, common prosperity, the most basic things are food. So they're trying to protect against food pricing, food inflation, as they've been hit with more floods impacting a lot of this grain output. which is going to become a bigger problem. So then U.S. production of selected classes of wheat, you can see that all of this continues to shift lower. Hard red spring, white, durum. So when you look at what the backdrop is and going back, this is one of the worst harvests we're expected to have going through 21 to 22. And even with a better crop in 2020, 2021, a lot of that has been exported. A lot of that has been consumed locally because, again, we have this shortfall. When you look at bumper crop versus a net drawing crop, we continue to be in this problem point. And all of these things are just continuing to get worse when you look at the underlying congestion, looking at Ningbo in China. So when we look at the container vessel positions, and this is as of August 17th, things have gotten a bit worse. When you look at what's at anchor, because you either have ports that have been partially closed, fully closed, and then partially reopened. But in general, you're seeing more and more problems with the amount of just backlog. And the longer the backlog lasts, the more the backlog grows, the longer it's going to take to fix, because it's not something where you just open up the port and you're instantly caught up. You have to bring the ships into port. You then have to unload them. Then you have to reload them. All of these things take time. And as you have this continuous slowdown and this inability to get empty containers from the U.S., from Europe into China, that's where we continue to see some of these problems. And again, this is why container prices remain at all-time highs. And this is another key point on why, we talked about it in the EIA show, these problems with inventories for Christmas, for the holiday season. It's not that they're not going to be there. It's just they're not going to have a lot of it because a lot of this stuff is going to be stuck behind a supply chain that is broken. Then when you look at the auto production, you can see auto production estimates continue to get taken down. This is the IHS market cutting its projections for 2021 autos. Global light vehicle production growth estimates have continued to dwindle down as now Toyota is cutting production after they finally kind of exhausted what was left in inventories. And even they are now in the point where they have to cut the amount of cars that they're producing. So then when you look at in the U.S., so auto production has had a solid rebound in July, up 11.2%, recovering some of its losses this year. So some seasonal positives at play. So seasonally speaking, this is a big period. You just launched the new model, like the 2022 model. So you're trying to clear out what's left in inventory, trying to push new production. So you typically get this, but the question is going to be how long can it last, given what is missing in storage, what is missing in the supply chain. So when we look at it, you still have some ground to make up to get back to that peak 2018 as other areas continue to see on a slowdown when we go abroad. And a lot of that is when we start looking at key congestion points. So when we look around the world, the key container ports are seeing increased congestion in Asia. And this is one of the things, when it's not just China, it's China, Vietnam, Indonesia, Malaysia, Thailand. All of these areas are seeing a big breakdown in how quickly they're getting stuff in and getting stuff out. And how much of this is exporting raw materials, semi-finished goods, finished goods. So if you're in Japan or if you're in LA and you're waiting for a piece that's now stuck in Indonesia, well, you need the piece and you're out of inventory, so you have to shut everything down, waiting for that to come through, or you have to go somewhere else to get it, or you have to try to use, air freight, something to try to make up for some of these slowdowns. Again, this is not just a China problem. It's a reverberating issue that continues to cause an impact around the world. And when you look at Shanghai Ningbo at only 8.8% net change, that has only worsened since this point. So again, these are things that are just continuing to become a bigger and bigger problem. And that's where we continue to see other things such as dry bulk prices continue to go higher. I like to look at this chart because I for one, remember 2008 and 2009 all too well when you had these huge surges. But you can see there's been a very steady increase. And when you look at dry bulk, you have to look at grains, you have to look at coal, you have to look at some of these, iron ore, a lot of these semi-precious metals and just raw materials that have to be moved around the world. And you're continuing to see this to help drive up some of this pricing. Now, do I think we get to where we have been? No. But you can see that we're pushing back towards those near highs, and there's a lot of support in the near term for some of these rates because you don't have any new ships coming on to absorb as we did when everybody rushed out to build new ships in 2008, creating the crash. But then when you look at general government gross indebtedness, when we start talking about stimulus and a means of trying to promote either local consumption, this is just looking at the gross debt in percent of GDP. And you can see, obviously, since COVID, you've had a marked shift higher with a lot of these individual countries continuing to increase their total debt versus GDP. And it's made worse because debt levels have gone up as GDP has come down. So when you look at these overall levels and just what is to come, you're going to continue to see these debt to GDP numbers continue to worsen. And that is doing a lot of things. And one of them is real house prices. So we're going to talk about the U.S. here, and you can see the U.S. is third on this list, but that doesn't include Canada and New Zealand, which continues to make the U.S. look somewhat moderate in comparison. But it's something when you look at stimulus, when you look at inflation, you look at asset prices, this is one of those bigger fallouts, which is why when we then turn to the composite PMIs, you're seeing some resiliency in the euro area, but again, they're the last to come out of COVID. So they're kind of closer to the peak, but we continue to see some of those estimates come down as the US has come under pressure and Japan, Australia has continued to slow. But the one that we're going to talk about the most in the next two segments is going to be the U.S. And then when we go into segment 5, we're going to talk more about Japan, Australia, and China in general to see how we're continuing to see this contraction. And again, this is the general slowdown on the global economic level, which is why on a macro point, I've always been concerned because we saw estimates go up really fast. We saw this expectation grow, but we're just not seeing the data support it. So that's where we continue to see the estimates. The city surprise index continues to go negative, essentially just showing just where those pressure points are. But in the next segment, we're going to focus more on the U.S. consumer and what has happened in the U.S. and try to now break this point apart into its different locales versus, obviously this global summary.